Hi, and welcome to the channel. For those of you new, my name's Dave and I work in financial services. And these videos are about my journey and development towards my aims of financial freedom. They will also chart my monthly development of my portfolios, hopefully some videos about financial products, and also some videos about improving your financial well-being. So hopefully you can reach your aims and your financial goals moving forwards. Remember, if you like the videos, smash the like button so this channel can grow and reach a wider audience. And now let's get into this latest video. So this week's video is about my ISA account during the month of August 2021. So my Stocks and Shares ISA. For those of you new, the aims of the ISA is an annual return of 10%. We're hoping to receive dividends this year of £500 and a year-end value of £50,000. Up to the end of July, very nice returns of 13.95%, and the end of August, even better returns of 17.72% for the year to date. Now during the month we made contributions of £1,511.86, and if we look at the following chart, we received no dividends for the month of August, but year to date we've received £244.67. But moving forwards, next month we should have some very good dividends from Lloyds, Legal & General, NatWest, Barclays. Okay, so hopefully moving forwards we will reach our target of £500. Across our shares, we've got a yield of 3.13%. Now we were charged fees from our provider of £10.57 during the month, and our portfolio is predominantly based 60% in the UK, 23% in the USA, and 17% in Asia. And if we look at the following chart, 39% is in financial services, nearly 15% is in technology, 11% is in consumer cyclical, and 8% is in consumer defensive. Through some of the holdings. So first we will deal with our individual shares. So we currently hold 9 shares in the portfolio, 6 are in profit, 3 in loss. It makes up 36.43% of our portfolio, so roughly £20,250, of which 34% is in the FTSE 100 and 3% is in the FTSE 250. So if we look at our biggest shareholdings, Lloyds Bank, we own 11,287 shares, £4,940, 9% of our portfolio. Had a very poor month, shall we say. It's down 5% in this month, but moving forward it will give us a good dividend, and hopefully it will give a good recovery play in the UK banking sector. Our next largest shareholder is Aviva. We own 928 shares, £3,750, 7% of our portfolio. During the month had excellent results. Dividend was increased 0.35% as an interim, so it will give us a very nice dividend moving forwards. Our next shareholding is Barclays, the bank. We own 1,464 shares, £2,700, makes up 5% of our portfolio. Again, a great recovery in the banks, and dividends have been resumed. Our next shareholding is Legal & General. We own 1,221 shares, £3,300, 6% of our portfolio, and we have topped up during the last month. So we did buy 358 shares for £1,000. The reason being was to increase one of our holdings, and at the moment it is giving a very good yield, currently 6.5%. Our next shareholding is Sainsbury's. We own 788 shares. Been on a recent rally lately because of the Morrison's effect and possible potential bid. £2,400, 4% of our portfolio. Our next shareholding is AJ Bell, the platform provider. We own 237 shares. £1,000 makes up 2% of our portfolio. No real profit since we bought it, but the numbers have been great. The results have been really good, and it does pay a small dividend. But moving forward, it has some very good growth figures through assets under management and through gaining new providers or clients through its platform. Our next shareholding is HSBC, 231 shares, £892, 2% of our portfolio. It was bought for diversification, hopefully away from the UK banks, a much more worldwide presence, and hopefully moving forwards quarterly dividends will be resumed, so it will give us some good cash flow towards our portfolio. Our next shareholding has somewhat struggled lately. Card Factory, the retailer, 1126 shares, down to £800, 1% of our portfolio, but moving forwards it will be very cash rich, and it was paying a very good dividend. It was in the past paying a special dividend, so hopefully when the high street recovers it will be a very good long-term hold. Down to our smallest shareholding at NatWest, we own 252 shares, £537, 1% of our portfolio. It was bought again as a potential dividend stock. Dividends have been resumed. We'll pay a dividend next month. But it was also bought on the back of the banking sector improving, and also the government will reduce their stake, and hopefully it will be much more free to do what it can do moving forward without being restricted by the government. But all the shares we hold are what we consider to be long-term shareholdings. So unless the fundamentals change, I aim to keep them shares between the next 3 or 5 years. So that's a quick summary of our shareholdings. As we said, £20,000 makes up roughly 36% of our portfolio, predominantly UK based, but all hopefully long-term good quality companies, safe, secure, will give us some great dividends moving forwards to reach our year-end goals. On to our funds we hold within the portfolio. At the moment we currently own 14 funds, 12 in profit, 2 in loss, which have only gone in loss in the last month. So we were showing very good positive returns year to date. Makes up about £35,300, 64% of our portfolio. Now, one of the shares that we did lose money on this month is Fidelity China. Sentiment was obviously knocked somewhat. The fund was obviously reduced in value. Currently down about 9% at the moment, so we saw it as a good buying opportunity, and we increased an existing holding of £500. Now, if we look at the following funds, I'm not going to go through all 14 funds, but a quick overview of the largest funds that we hold. So our largest fund is a global equity fund, £4,500, makes up 8% of our portfolio, and a very good profit since we bought it of 30%. It was bought because the portfolio was originally so UK based. It was bought for diversification. There would be good some companies, there would be good bad countries, so it's bought for hopefully for diversification moving forwards. Our next fund is slightly selective, Bally Gifford Positive Change. Very small select shareholdings, but an excellent performance since we bought it. £4,500, 8% of our portfolio, showing a very nice profit of 50% since we made our initial purchase. Our next holding is Legal and General Technology, £4,200, 8% of our portfolio, showing a very nice return of 68% so far. Again, it was bought for diversification, but the big tech stocks have had some great returns the last 12 months to 2 years. May not be that way moving forwards, but we will review that, but we cannot complain with a return of 68% since we bought them holdings. Next shareholding is Fidelity China. As we said before, slight drop. It's showing a loss of 9%, 6% of our portfolio, but £3,600. Ultimately, China will be a long-term play. Short sentiment has been somewhat hampered or not through confidence, but it will be a great performer moving forwards. Our next fund is the US smaller companies, £3,200, 6% of our portfolio, showing a very nice profit of 28%. It was bought solely for growth in the US away from the large cap stocks, and hopefully a long-term holding moving forwards. And then we've actually got a UK smaller companies fund, £2,900, 5% of our portfolio, showing a very nice return of 16% since we bought it. Now, other holdings we do have, we own a UK growth equity fund, we hold a European fund, we hold an emerging market fund, we own an AIM fund, a small cap fund, down to our smallest fund, which is a Russia fund. We put £500 in, it's now worth £600, a nice profit to date of 20%, but it makes up 1% of our portfolio, and it was bought because it's got good track record, and it was bought for diversification. So a quick summary, shall we say, 14 shares, 14 funds were in profit until this month. Okay, short-term blip, but ultimately all the shares or all the holdings are bought for long term. So between, again, just like our shares, between the next 3 to 5 years, unless the fundamentals change within that company or the management may change in that company. So a quick summary, I would say 17% for the year to date, cannot complain, and hopefully we are well above our targets for the year-end value, mainly because of the increase in return, but also because we've increased our contribution, we put in more than expected. Okay, but hopefully we'll meet our aims for the year to date. Remember, these are my own opinions. Okay, they're not recommendations, it's a reason about why I hold these shares and why I hold the funds and the aims of the portfolio moving forwards towards reaching my financial goals and aims. Remember, if you like the videos, smash the like button and we'll see you again in the next video.